Trader Station, how you guys doing? I have a chart of the pound dollar here, 4-hour chart. One thing I do want to mention before I start this video is just the characteristic of this chart on pretty much every time frame. I mean, look at all this overlap here. This is in 98 to 2002, 2004. Lots of overlap over here. Lots of overlap. We can see that on all of these charts. As soon as we get above things, we sell down. As soon as we get below things, we buy up. These are all characteristics of a trading range. As soon as we get above this, sellers to buy it down, kind of get this double bottom, we buy it up, we double top, we have to go down again. We get below this area, buy it up. We get above this area, sell it down. We get below these areas, buy it up. Same thing here, get above here, sell it down, get above here, sell it down, get below here. Looks like we're buying it up. So I just want to make us aware that we are in a trading range. That is one reason to expect these breakouts to fail. So the most recent sell down here, oh my god, look how strong this is. Such a tight bear channel. We're going down till the end of time. Well, let's look over here. We see these lows. Chances are, from what we have seen, when we get below things, we buy ourselves up. So when we get below things, we're expecting to buy ourselves up. You can see we got a little tiny bounce there, but here we are getting below these things and we bought ourselves up. So that was one reason to expect that, we're going to buy ourselves up, get some type of bullish breakout, because this is a large trading range pattern since 1998 or whatever, and that's one reason to expect why we might go up despite such a tight bear channel here. So this is the 4-hour chart, and if we zoom in, what do we get here? We're getting a little congestion area. Finally, we get this breakout on top of all these things. You could say this was a tiny breakout on top of this double top, and I like that, but as you can see, there was no follow through. The gaps closed immediately, so maybe that's not what we're looking for as far as looking for measured moves for the breakout. Here we have a nice breakout on top of all this. Yeah, we're kind of stopping here, but this a little bit far away. I think the main congestion area was right here, this double top. If we get above here, I think it's safe to look for some measured moves, and of course we have to look for bull body follow through on the breakout, and that's what we got. So if you wanted to do a measured move, that would be the breakout point above this, and we got there. Now the problem with this is that look how big this 4-hour bar was. We're practically already at the measured move when that happens. So another thing you can do is once you see that bar getting kind of large, maybe go down a time frame. If you're on the 4-hour, maybe go down on the 1-hour, see what the 1-hour looks like. And we can see on the 1-hour really nicely these consecutive bull bodies lining up that created that big bull bar. These bull bodies consecutive, that's a sign of a breakout. Strong closes on their highs, signs of breakouts, and the bodies are even getting larger. Okay, so that's increased buying pressure. And if you're looking at the 1-hour chart, you can see with this bar that we gapped above all of this area here. So let me take this and do a little bit of that. All of this area here, we're breaking above. You can see this double top action going on, and we're breaking above that with this bar here. So at this point, I definitely say that it's safe to look for measured moves, and we would just do the same exact measured move that we did there. Like I said, I like to touch as many things as possible, and with this I'm touching all of this stuff, and we'll put the 50% mark over the breakout point, and that is the breakout point right here, and that is exactly where the market took us before we had to pull back, go sideways around that measured move target. And as you can see, we went extra sideways here for a little while. A lot of times this measured move target becomes the middle of the sideways action. So yeah, it looked like we were going down, but then we got, you know, this short little breakout, kind of failed, and you can see that this measured move target is acting as the middle of this whole sideways congestion action. Now we are in a trading range, so on this chart, but we are also getting another breakout here. We're getting this breakout. This is the breakout bar below all of this congestion area. So anybody that bought out in here is now holding a losing position as of the close of this bar. We got bear body follow through for the downside breakout, and look at these consecutive bear bodies. This is all breakout characteristics. So at this point, I'd say it's safe to look for measured moves. We can start here. If I start the measured move here, I'm kind of touching all of these bodies, and the 50% mark is right there, and look where it takes us. You know, we're breaking below this point, start over here, it takes us over here. And when we look over, that's exactly where the breakout was before that created this measured move. Okay, and that's what these measured moves do. These are all done by computer algorithms, and they remember prices. This was an important price, so it's logical that it comes back and tests that important price, and that's what's happening with this measured move. So, you know, I'd have to say we have some downside here left to go. That's not to say we can't go up. What's this? And you know, it's about 40 pips up or so, a little less. Not to say we can't go up. That's not to say we can't go up and close this gap, and this breakout will fail. You know, just like I've said in a couple of my failed breakout videos, you know, just because there's maybe a 60% probability or even 70% probability that we're going down, that doesn't mean that 30 or 40% cannot play out. There's a lot of people that choose to bet against the higher probability, and the reason they bet against the higher probability is because they're looking for a reward much higher. So the bears right now, they're looking to get down to about this area, I believe it was the 152.80 mark, and that's about 60 pips down or so from where we are right now. But at the same time, you can take the other side of the bet and you can look to get up to, you know, 54.40, and that's 100 pips away from where we are. So they're going for the higher reward, and at the same time they could even be looking to break out of this and go higher, so they could be holding for more. But you know, all that being said, remember this is largely a trading range chart, but within these trading ranges we can sometimes find little breakouts, especially on the lower time frames. And as you can see, it was even tough to do this on the 4-hour chart. We had to go all the way down to the 1-hour chart, which is about as far low as I go in the forex market when analyzing charts, and we had to go down to the 4-hour chart to even find this this breakout here and all the characteristics of it. And we're seeing it here. If we look at the 4-hour chart for that, you know, yeah, it's just kind of a little tougher to see. It doesn't look as nice. You know, we are getting that breakout below this little double bottom area right here, nice little double bottom, and we're breaking below it with this bar. Not the strongest close, but it is a nice bear body, and then we do have bear body follow through, but again, not the strongest close. As you can see, we couldn't even close below the low of this bar, and these bodies are also getting smaller, so that definitely is decreased selling pressure. So maybe all of that takes the probability down to, I don't know, 55% for the bears, 53% for the bears. You know, nonetheless, it looks like the bears have the advantage for the next 60 pips or so while things are lining up, but it is not a very large advantage. And you know, it's all up to you on if you want to take these trades, how you want to take them. Maybe, you know, you're saying that because this is a trading range chart and because the probability is decreased based on the fact that we're getting smaller bear bodies and not the strongest closes and yada yada yada, I'm gonna take the other side of the trade. So it's all up to you and your preference and how you do it. I'm actually not trading this chart at all. But yeah, hope you guys found that helpful, and until the next video, guys, thanks for listening.